Hello and welcome to our market alert video for the week ended March 25th, 2022. And this week I want to talk with you about the two sides of the coin that appear to be the arm wrestling match between investors right now. So the upside is, well, let me go with the downside first because I like to end on the upside. So the downside is that if you look at bull markets and the major bear markets that we've had, the bull markets have been killed many times by Federal Reserve policy mistakes. And the major bear markets that we have had, historians have for the most part attributed that to Federal Reserve policy mistakes. The Great Depression, 2008, Y2K, those kind of things. So as we look into the future, let's first look at the mistakes that the Federal Reserve has made up till now. And then let's talk about the policy mistakes they could make going forward that could cause this to degrade, turn into a bad recession, or worse, stagflation and a big bad bear market. So first of all, when the pandemic came, the Federal Reserve threw trillions of dollars into the economy to help make sure that there's tons of money out there so that we don't have another depression. So we can't blame them for that. So I just want to be clear. But we can look at the amount of money that they threw into the system, and it was way more than what was needed. So what happened was it created this massive amount of money chasing after a smaller amount of goods and services. And when you have lots of money chasing after a small amount of goods and services, guess what you get? Inflation. So a lot of the inflation that we're seeing right now is a cause of that. Now, that was the first mistake, too much money into the system. Second mistake was that they said that this inflation was nothing to worry about. It's transitory. The supply chain is what's causing it. Once that resolves itself, it'll all go away. Well, the supply chain, for the most part, is abating. It's improving, but inflation is not. It's, in fact, seems to be getting worse. So they were behind the curve in terms of addressing the inflation issue, and therefore now they have to play catch up. So they're behind the curve. So they have to raise interest rates potentially a lot faster than at first they wanted to so that they can get inflation out of the system. Well, that brings on the future and what mistakes they could make in the future that could be detrimental. So they have to thread the needle here. So if they raise interest rates too fast, then what will happen is they could potentially choke off the economy. If they do that, we could have a terrible recession. And if that happens, we could have a terrible bear market that goes with it. We could see the Dow and the S&P go down a lot, which is what happened back in 1982 when Paul Volcker, the then Fed chairman, said, we're going to induce a recession. We don't care. We want to get rid of inflation, and so we're going to do whatever it takes. So why do they do that? Well, because if they don't raise interest rates fast enough to compensate for inflation, then what could happen is we could have stagflation, which means that we have inflation still happening, but we also have a slowing economy. And that, ladies and gentlemen, if you are the Federal Reserve, is the worst case scenario. You don't want that because stagflation feeds upon itself, and once it gets going, it is almost impossible to stop it until the economy literally dies. So not something the Federal Reserve wants. So the likelihood is that they're going to raise interest rates as much as it takes to kill off inflation before stagflation comes into play. So if they have to thread that needle. If they go too fast or too slow, in either case, we have some dire consequences that could happen. So that's the downside. The upside is that we could see an end to the war in Ukraine. We could see peace. Optimism returns. Oil prices fall dramatically. The Federal Reserve threads the needle. They engineer a soft landing. The economy doesn't go into recession, but inflation is controlled. If all of that happens, then we could see Dow 40,000 before this is all over. So those are kind of the two sides of the coin. Which one's going to happen? I have no idea. Don't look at me. I don't have a crystal ball. So what do? Well, I am a planner. So I plan for the worst and I hope for the best. So right now, with our invest and protect strategy, it is designed to help protect us from the worst, but it is also designed to help us to participate in as much of the upside as we possibly can. So if you're over 50, if you are retired or retiring soon, I would encourage you to visit with one of our retirement planners. Look at your entire financial plan, your diversification, your risk that you're taking, all of those kind of things. Are you going to address inflation in the proper manner? We want to help you to have a successful retirement. As we always say, your retirement is your second childhood without parental supervision. We want you to go play, enjoy, have fun. So we want to do that for you, but we can't unless you let us. So our website is rpoa.com. I encourage you to go there and avail yourself of our resources. Thanks for watching this video. Share it with as many people as you would like. I encourage you to, and we'll talk soon.